What is going on, investors? Back again. Time to talk about Cisco Systems, which reported earnings today after the bell. We see here during the regular session down 1.68%, but after hours up 8%. So what's going on in the after hours? They just reported earnings. Like I said, they came in light year over year, about 9% down year over year. When we jump into the numbers, we'll actually see that. And then we'll jump over the stock chart, see where this one's trading and where it might be heading. Now, what I think investors might be kind of excited about is this Q2 guidance was decent. Okay, you see here, we were down 9% year over year in the Q1, which is the quarter they just reported. They're saying for Q2, they're going to be down 0 to 2%. So they're actually guiding to basically flat year over year earnings, which I think has investors more optimistic about the future over at Cisco. They're going to come in at $12 billion when the street had them down at about $11.7 billion. So that's pretty solid from a guidance perspective. Let's jump over the numbers. Take a look at what we've got going on here. We've got a revenue here, we've got product, and we've got a little bit of service as well. Service was up just slightly, but product was actually down quite a bit. We went from 13 billion in the previous 3-month period down to 11, we'll call that 12. So down about 10%. Take a look at cost of sales. Those trended in the right direction as well. You see that we're down here on the revenue. So our cost of sales went down too, showing you this is a mature company. They have their cost in line, at least from a cost perspective for the revenue. Went down from 4.7 down to about we'll call that 4.35. That gives us a gross margin of 7.5. That comes in light compared to the previous period. We were at 8.4. This is in millions of dollars. So this is 8.4 billion. We'll call that $7.6 billion. Again, we're coming in light, but I think investors were actually expecting it to be worse than it actually was. Now let's take a look at operating expenses. Not as good a story here. We see research and development basically flat. We see sales and marketing down just slightly. General administrative actually ticked up a little bit. And then we've got these restructuring charges. I think this is also what investors might be giving them a pass on, is it went from 184 up to 602. And that kind of messed with the total operating expenses. You see, we went from 4.9 up to 5 billion. So our sales went down 10%, but our operating expenses actually went up. And I think most of it has to do with these restructuring charges, which at some point won't repeat, I guess. And so that should improve this operating expenses. So we come down to operating income and let's come all the way down to net income. We've got 2.1 compared to 2, call that 3. So down significantly from a net income perspective. But when we take a look at the dividend here, we've got a $1.44 dividend. That's 3.6% yield, which is solid. Probably not factoring in this now 9% bump in the after hours, but we made 51 cents a share compared to 69 cents. It looks like share count was just reduced just slightly. So that's probably improving EPS just marginally, but we've got plenty of coverage on this dividend. You want to annualize this out. That is basically $2 per share, and we're paying $1.44. So they got plenty of coverage, even in a kind of a soft quarter, to cover that dividend. That should keep you excited as an investor. It's Masters Week. I'm not going to take all your time today. We'll just jump right over the stock chart. Take a look at what's going on. This stock was in a beautiful uptrend. Gosh, I wish I would have had this one on my watch list, because once this got up in this channel, this stock made a nice ride. Now you had to ride it through earnings, and take a look where we're at here. We're right at our 50-day moving average. Our 50-day moving average is at 42.51. After hours, we're right at 42.22. Kind of right on this upper, this supply line right here. And so I would expect sellers to step in right where the price is. And so it'll be interesting to see what happens to Cisco in the coming days. This line should both bring in sellers, but act as a little bit of support too. You also have this 50-day moving average will now act as kind of resistance on the way up. But if Cisco's, for whatever reason, I think they're going to need the market to kind of stay hot and keep trading upwards. If it can get above this candle's just kind of sitting out here all on its own between about we'll call that about 43.75 down to about 42.77. If we can get above this candle, take a look at what we got above. absolutely air. This is like Michael Jordan jumping up into the rim. This is where you want to be. You want to be in that kind of airspace, because if this stock can get above this candle, boy, there's not a lot of resistance up. Obviously, there'd be some stops along the way. 45, 46, up to into this range, you'd be at 47. I'm not saying it's going to shoot right through this gap, but getting above this zone, getting above this 50-day moving average, getting it to turn positive would be a very bullish sign. You also have this gap up here that's going to attract this stock up here, because look, when you have these gaps, that means an absence of buyers and sellers. And so if you have enough momentum in this stock, it should push it right up into this gap. Maybe not all the way up through it, because you have plenty of sellers that might step in these ranges, but boy, you could easily come up in this stock up to in that $44 to $45 range per share. That to me would be an easy target if the momentum stays positive for Cisco. So chart's looking pretty good. It's at a little bit of a turning point. I'm not saying I'm going to jump in here and buy this one, but I'm going to monitor this one, because if we can stay above this range, we can get this moving average turning positive, and we can start getting close to breaking through this candle here. This one probably does have some room to run. You probably make a little bit of money, at least on maybe a trading perspective. From a longer term perspective, got no problem with this company. It's trading at about a 15 PE ratio, probably a little higher than that, factoring in the after-hour session. You are collecting about 3% on the dividend as well. It's a solid stock. It's one of those cornerstone stocks that you could easily have in your portfolio. It's not going to shoot up and go crazy on you, but it's certainly, it has shown that it has traded all the way down to these lows, and now it's made a very nice recovery. And boy, you've got a nice little gap here that, if that starts to fill, could be good for Cisco in the future. That's Cisco Systems for you. Be back again soon. Good luck with your investments.